Hello, everyone, and welcome to the CPA Lady Podcast. My name is Marjorie McPike, and I am your host. I am a CPA in Southern California, where I practice tax preparation, tax planning. I help assist with estates and trusts, and also inform people on generational wealth. Thank you for listening today. Please like, subscribe, share. If you're watching me on YouTube, please do the same, like, subscribe, and share. I have with me today Basil Agrocosta, a CPA in New York, and Basil, works a lot with creatives, correct? And he's with Agro Accounting CPA. So
Yes,
Basil,
that's
please introduce yourself because I don't want to leave anything out.
sure thing. Thank you for having me on your show, Marjorie. I'm happy to be here. Uh, so yes, I'm Basil. I am a CPA originally from New York. I work with clients both in New York and California, and soon with clients in Texas and other locations. I am transitioning to being an internet-based accountant.
Awesome.
I have been self-employed through my practice, Agro Accounting CPA, for nearly 10 years. In fact, a few months shy of 10 years, as I went on my own in January 2012. I work with a lot of, and it is my specialty niche to work with creatives, artists, musicians, creatives, right? And freelancers and small businesses. Um, that's my target market. That's who I work with. I also work with other people, but it's my main bread and butter. Um,
Why do you find yourself working with that particular area? What have you found to be different about them?
well, the truth of the matter is I don't want to, give you a poetic answer that is entirely fabricated. The last accounting firm I worked for, which was purely coincidentally, I was looking for a job at the time, the way we all are looking to be hired by a company. In fact, I used to work for Ernst& and Young, and in 2008, 2009, you may remember that Lehman Brothers collapsed, and that brought, you know, a reduction of the accounting workforce as well. If private equity and other financial firms are collapsing, that's putting out of work accountants as well. So I found myself out of work. And at the time, I found a job simply by looking through the classifieds with an accounting firm in Midtown Manhattan, New York, that specialized in the arts. Now, this small Midtown CPA firm specialized working with high-end art galleries from the Chelsea area. I mean, we're talking here top 1%. I worked with them for a couple of years. I then went out on my own, and during my time at this boutique CPA firm, it happened that my girlfriend at the time was also an artist, and we would go to a lot of art shows together. So, working for an accounting firm that specialized in the arts, worked with art galleries, and then having an artist girlfriend and art gallery hopping every Thursday and Saturday, you start to give out your card. And even before that, you just have genuine organic conversation with people the way you would have, let's say, at a bar, right?
Mhm.
When you're just hanging out in a social setting. Over time, people started to contact me. That planted the idea that I should pursue working with artists and art galleries and creative small companies, which I initially did on the side. I then went out on my own, and I slowly but surely built my client base. So it really happened organically. It did not happen that I had a calculated intent to work with this population. I just happened to adapt to my circumstances. I liked working with these folks because typically they're very friendly and easygoing people,
Mhm.
good
Mhm.
people, and I just stuck to it.
Mhm. Awesome, awesome. Do you find anything particular regarding like their accounting or their taxes that they don't seem to keep up with? Because as I mentioned before, one of the reasons why I started the podcast was to help to educate individuals that weren't
Mhm.
aware of, the resources that were available to them when they start making money, when they start their business. So did
Mhm.
you find any of that, or do you find any of that?
I think that working with a lot of artists, creative people, they sometimes, and I think it's maybe part of like the general, what's the word, aura that, the concept of the IRS brings to people. Many people are scared of the IRS. They're scared of taxes. And in all candor, Marjorie, many times people make it a bigger deal than it is. Now, maybe it's easy for me to say because this is how I earn my living and I've been doing it for 15 plus years and I'm a CPA. So maybe it's easy for me, easy for you to say, man, you do it every day. I get that. But I also think that a person's attitude or perception has a big impact on how they tackle their finances. I talk to a lot of people where I find myself where I don't want to say babysitting because that's a condescending term, but I feel like I'm more of a maybe kind of like a parent nursing their child and letting them know that things will be okay. There's this element of stress and anxiety that people have. And this is apparent, especially with artists and creative people, because they say, well, left brain versus right brain. We're the creative types, and this is pure number and black and white.
Right.
So, and it's not necessarily the case because your attitude, your energy going into, say, organizing your things has a big impact on ultimately the smoothness, at least, of the service and your interactions with your accountant. So I'm not sure if I answered your question in full. I'm happy to otherwise elaborate or pivot on that.
That's a good answer. I like it. I like it. I want to talk to the clients that you work with. Are they more local? Because you mentioned that you have multiple offices. So do you
Yes.
find them to be more local, or are they in? Do they do a lot of things on the internet, I should say?
Well, I will say this. The majority of the people I work, I myself, just to let you know, I'm 38 years old, and
Mhm.
I find that a lot of people I work with are maybe in their 20s and their 30s. They're millennials, sometimes they're in their 40s, but I work with a young, progressive, internet loving, everything on an app population. And I think that anywhere you go in the US, particular in major cities and in states like, California, New York, uh, and those are not the only two, of course, but they stand out so easily. Major cities and progressive states, you've got this young generation that does everything on apps. Now,
Mhm.
everyone has Facebook, but I'm talking about doing so many other things on an app as well. Facebook is almost kind of like Internet 101 or Internet 102. I mean, my dad's on Facebook. We've got grandpa's on Facebook. It's not necessarily the forefront of technology anymore, but I work with so many people, long story short, that do so many things on an app. So that's one of the reasons why I've transitioned my business to being internet based. I used to rent office space, and I mean, I still do, but I would have people who lived a block away and never come to see me in person.
Mhm.
So,
Mhm.
as a result, I had to scale down my office space size because what's the purpose if you're not going to come see me? But the long story short is I work with people who are tech savvy, whether they realize it or categorize themselves in that way or not. And as a result, it allows me to conduct a lot of my business over the internet using technology.
Okay. And you do find a lot of people that are doing things. My business is primarily virtual as well. I
I
don't,
see.
I have a very small office space, but no one comes to see me. So
Yeah.
um, we we talked before, because I was mentioning to you that one of the reasons for starting the podcast was because I saw a lot of people that were making money during the pandemic. And we talked
Mhm.
about that. Your question to me was, what type of industries? And so I would see people that were trading stocks and options, or trading or selling digital products or courses or things like that. And one of the things that you mentioned was economic nexus. So
Mhm.
can we just go back to that and talk
Sure.
about that a little bit more?
Sure. So, in terms of people that sell a digital product or a service, you're working, let's say, virtually, you and I even included, and you're working with people that may not just be in your home state. Eventually, first of all, if you start to develop significant income and consequently profit in another state, you may have to file an income tax return. And that is off the concept of, well, economic nexus or not, that has always been the rule that if you earn income somewhere, you first have to pay taxes
Right.
where you earn it. In the same way, for example, people, when they earn income abroad, they have a foreign tax credit. They first have to pay taxes you always pay taxes first to the jurisdiction where the income is earned, irrespective of your residency. You then get a tax credit at the international level. It's the foreign tax credit on
Mhm.
IRS form 1116. At the state level, it's a resident state credit for taxes paid to another state, aka jurisdiction. That's for income tax. But for sales tax recently, what has happened is with these economic nexus, I think it was Wayfair versus North or
Right.
South Dakota, which was back in 2008. And that's with the advent of online sales, with companies like Amazon and Wayfair selling all over the US. That's when the state government started to say, hey, hold on a second. We don't care if your Amazon headquarters is wherever it may be. If you're making sales and shipping here, even if you have no physical presence here, if you have, quote, economic nexus, meaning significant business in this state, you have to pay taxes in it. So when you speak of selling digital products, or digital courses, we would have to look at the sales tax rules of any jurisdiction, of each jurisdiction. But the point is this: if you're a small business owner and you're making sales of your service or goods to another state, like I was telling Marjorie off the record, that individual or group doesn't necessarily have to fervently track every sale to every state. But I would think it's good for your own business development purposes that you know where you're making sales. If you know that you're developing a following in Colorado and New Mexico and Oklahoma and Pennsylvania, wherever, for whatever reason, you're probably going to want to throw money there. You're going to want to add fuel to the fire. You're going to want to build on where you're strong, right? They say hit while the iron's hot, right? So if you're developing, for whatever reason, you're in Southern California, but people in North Dakota love you, you're probably going to want to spend more money on advertising to become more popular and more present there, and to gain more business. The name of the game when you have a business is to earn income, morally, ethically, but you're there to make a profit. Why would you shy away from another state? So let me not get verbose here. I hope I've answered that first part. Now, one thing you also mentioned is you talked about digital products, and I'm sorry, you said also something else that I wanted to.
Stock and options trading.
Okay, well, for stocks and options, one thing that I want to say briefly is stocks and options are investment income. They are capital gains, unless the person, if they're doing it day to day and now they are significantly investing of their time, they may make, I think it's called the mark-to-market election under Section 475, if I'm being super geeky here, where you can basically elect to be treated no longer as an investor, which categorically means you've got passive income subject to passive rules. In the case of Schedule D gains and losses, you can only write off a $3,000 net loss every year. Or if you elect to be treated as a business, your gains and losses are ordinary. So that's, I guess, another topic of conversation. But I would think that in the event, we'll see for stocks, that's and I'm sorry for thinking out loud, but for stocks and options, it's a bit weird in that people have been trading on the internet for like 20 years, stocks and options. That's not so much new. I mean, it's like if you have an E-Trade account, who really says to themselves, well, where's this IBM stock that I'm selling located? So that's something interesting in that I haven't had yet. I have a couple of clients who trade. In my case, it happens, I've got a few clients that trade cryptocurrencies that we have elected to make it a business instead of a Schedule D investment activity. With cryptocurrencies, sometimes international considerations come up. You may have heard the other day in the news that Binance was restricted in a certain country. Binance is abroad. I believe it's in Switzerland and not in the US. So there may be foreign reporting considerations with cryptos. But with stock, at least domestic stock, when you're trading your Tesla, your IBM, your Ford, your GM, your whatever USA company, it's within the US. But I haven't, to make the long story short, Marjorie, I haven't had yet a person say, well, this stock is based in another state. I haven't had to do such homework. And so I'm sorry if I'm fumbling here a little bit.
I don't think that's the issue with the stocks and options. It's more of the people that are making significant gains with options. And that's what I saw in 2020.
Okay.
I actually do my little stream. I actually wrote a course about it because I saw so many people, making $100,000, $200,000, in a day or in a month. trading options. And I'm like, well, you need to know what's going to happen with that money. You need to know how that's going to affect your taxes. And so I
Yes.
wrote a course where that it explains that. And we do go into the mark-to-market election and the benefits of having that. So I actually had a conversation with someone recently where they were looking to start trading and they wanted to know how that was going to affect them. And it's like, yes, you can do it as a business, and your gains and losses are treated differently. So it's just, for me, it's a matter of getting the information out there and sharing it so that people know what to do, and also to give them the opportunity to make some changes. Tax planning is huge. So many people are making money or doing different things and not knowing how to adjust their tax situation for that, whether it's making money or losing money. Greg?
Well, yes. Well, I mean, I would say I hope that someone who made $100,000, $200,000 in a month or in a day, that they're, thinking about taxes, period. I mean, when you're at that caliber, I would think that you're reaching out to an accountant, to a qualified accountant like you.
That's
I mean,
the
I
hope.
hope there's nobody, I really hope there's nobody out there who's like, yeah, I made $3 million this year. Do I need to pay taxes on it? When you're at a certain level, I think that that you need an accountant to be pretty much married to.
Right. And I think that it's maybe it happens so fast and you kind of get caught up in the hype. And I find a lot of people that they know how to make money. They know how to make money, they know how to get it going, but then it's just that other part that kind of gets set to the side. And like you said, there's that anxiety, of dealing with the IRS and of taxes. So people just don't want to deal with it. They know it's there, but they don't want to confront it and deal with it. So yeah. So what other types of things do you find in the clients that you work with, or
Meaning?
Meaning, like, do you do a lot of tax planning for them? Does their income kind of fluctuate? How does that work?
We definitely do tax planning, and that's something that, end of November, December is tax planning month. When we review the year's activity, we try to project what their tax outcome will be so that they are prepared. And for my clients that are S corporations and C corporations, at year end is also a good time to make a salary adjustment where, the IRS typically requires that a business, let me take a moment here. So if you're an S corporation, the benefit of being an S corporation is an S corporation doesn't have to pay Social Security and Medicare taxes. However, an S corporation does need employees to run it. We do not live in a world yet where corporations run the world. Even those big inanimate corporations like Amazon have people faces behind them. So if you're an S corporation or a C corporation, you must have even manager employees. And if they're stockholder employees, they need to draw a percentage of their profit through the salary mechanism. And one of the things we do at year end is we'll review the year's profit to see how it is and to see if we need to make any adjustment to salary, whether we need to increase it as a tax bonus, or sometimes if the client had a worse year for whatever reason, we might have to reduce it come January 1 of next year. So that's a situation where tax planning is important. Also my clients will say, those who are self-employed, let's say you're a trader and you're self-employed, I'd set up estimated tax payments for you. But it is also for the client to contact me throughout the year. Typically, I tell them, let's talk maybe no earlier than the summer or the fall for you to tell me how things are going, for us to make any adjustments if necessary. I will say this, I have also a lot of clients, Marjorie, that never pay their estimates, and that's something that we do, come tax time. And that's something I've begun to accept. It also depends on your clients, ultimately your income levels. Clients that make hundreds of thousands per year, there's no way out of that. But if we're talking about a freelancer that is earning a living, that is making, say, $40,000 or $80,000 per year and has certain expenses, they're earning a living. They are not rich by any stretch of the imagination. For everyday folks, sometimes they opt to simply not make estimated tax payments and to wait until next year to pay them then. So
that's interesting, because a lot of people aren't even aware of the concept of estimated tax payments.
Right.
And that's kind of where I try to direct my podcast, is because a lot of people aren't even aware of that, even aware of tax planning, and talking about, just having good financial records, that's kind of like a big thing that we deal with as well. Like I said, the money it's easy to make the money, but it's just that other part of it that we just kind of don't think about.
Well, one good thing I see from people who become veterans over the years at being self-employed or having a small business is that over time people get into this habit, whether it's painfully, unwillingly, they eventually, for instance, I'm thinking of people who are Schedule C filers, and they've been filing a Schedule C, whether it's with me or with other preparers, and they've been doing this for 10 years. They come to me, and sometimes they have their income and expenses so neatly organized, and they may or may not have made estimates, or they've come to a conclusion that they're okay with paying at year end. So it may also be dependent on that person's, the word isn't maturity because that's like a skewed word, but a person's experience and longevity in business. The more you've been in business, the more you know that you can't just be like, what are you talking about to your accountant when they tell you about estimates? I work with a young population, so I get a lot of what are you talking about or estimate skipping. But that happens to be my particular demographic. I don't know what yours is, but if they're also, people in their 20s and their early 30s, many times they'll skip estimates because they haven't been doing it for long enough for it to really stick in their mind that that it's in their best interest.
Right, right. And I work with a younger population as well. A lot of millennials, like I said, they know the apps, they're good at social media, making the money, generating it, all of those things, but it's just that other part that, working hard in order to get them to understand that this is important. The value of making estimates, the value of knowing what your finances look like, as you go throughout the year. So.
And I will add to that also sometimes it also depends on a person's on personalities. I have people who are creative, and we go back to left brain, right brain, and they are so organized and their spreadsheets look better than mine. And I think I'm pretty OCD. I tell people jokingly I'm an accountant by nature. Actually, it's not jokingly, it's pretty serious because I am very organized and I can see things sequentially. It's part of my nature. That's one of the reasons I chose accounting, and may I dare say I enjoy it. It fits me well, but I have, clients who are artists and they have these immaculate, super organized, color-coded spreadsheets. They go even beyond what I would do. It also comes down to personality. I don't know what, let's say, what your business model is in terms of, let's say, volume or versus having more tailored services, and you don't need to answer that. But I know that, as I'm looking to work more with day-to-day folks, though I work with high net worth people too, but I seem to get more day-to-day folks. They happen to be more than 98%, right? And as I'm looking to get a bigger chunk of that 98%, I'm also saying to myself, how can I do things more efficiently to not necessarily focus on those points that may not be so relevant or ultimately may be too difficult for people to seize, and sometimes it comes down to personality. But I think I'm digressing because now we're talking more about like my business approach, but I should mention it a bit at least. It's fair also for the audience to know. I have a couple of videos, and one of my videos I say for clients, they also need to be realistic to their economic circumstances when they hire an accountant. If I may be so bold to say this, if I have someone that hires me, let's say for a $300-400 tax preparation once per year, they also need to know that that does not come with, say, 30 hours of financial guidance throughout the year, because many times we tend to misappropriate things that are like from, like one group or another. I have clients that come to me and they're, making 40,000 per year. They need a tax return to be prepared, but they want, the VIP service that they heard that a boutique shop that has $5,000 accounting bills charges. And we also need to keep materiality in mind. And sorry for that being like one big mishmash, but it's also relevant to clients, because sometimes I have clients that tell me, should I set up like a bookkeeping software? And sometimes you want to go to QuickBooks or another bookkeeping program. And other times, if you have like 100 or less transactions per year and you've got 3 pages per your monthly bank statement, you can get away with setting up an Excel spreadsheet as well. And I heavily favor that for my more middle-class people that once a year tax return filers. So what I'm saying here, long story short, is, the level of sophistication of information and your financial detail needs also depend on your economic standing. That's not meant to box people in a certain class, but if you pretty much need an accountant once a year, and if your income is more or less the same every year, and you have estimated taxes to pay, don't make much ado about that. That's when you don't necessarily need tax planning. If you're making more or less the same every year for whatever reason, and that's, stick to, sometimes you have to keep things more simple. That's what I'm saying here.
Mhm,
On the
mhm,
flip side of that coin, so reality is dependent on situation.
mhm. I like that. I like that. And I
Mhm.
appreciate you going into detail about that because people need to know a lot of, like I said, a lot of people are apprehensive about the IRS and then therefore working with the CPA. So I was going to ask, like, how is it with working with you? How do you bring in your clients? What can someone expect when they come in?
Right. Well, I guess, so what, I know you said yourself that you work with a lot of younger millennial people, typically people in their earlier stages of make less money than later on. That's not to say that there's not plenty of young people that make a lot of money, but for the many 98% normal people,
Mhm,
um, sometimes what I try to do is to keep things simple and effective. Like, as a case point, if you made 50,000 last year, you don't necessarily need a 2-hour consultation on QuickBooks. I tell you, dump QuickBooks. It's going to cost you $20 or $40 or more per month.
mhm,
And since you're not an accountant, since you probably don't have bookkeeping background, you're going to mess things up. And then you're going to have to hire a CPA like me to clean up your balance sheet because you put expenses under liabilities, or, you put, so sometimes, what I'm saying here, to echo the prior point, is sometimes, uh, working with a CPA, you have to trust that person. They want to do
mhm,
you good, and sometimes they will actually take in a direction where they want to simplify things, not because you're less important, but in the same way how in the principles of the profession, materiality depends on company. you know
mhm.
Immaterial can be $300 million for a $30 billion corporation, which
Right.
is how we understand why $30 billion corporations don't have executives go to jail when they make a $300 million mistake on their balance sheet. So
Mhm.
in tune with that, you may not want to employ more sophisticated systems. Don't bring a machine gun to squash an ant,
Right.
you know,
Right.
to your
Right.
finance. So working with me, to answer your question directly, I try to be very versatile and adaptive. I have clients that make over $1 million per year. I have clients that make $25,000 per year.
Mhm.
And I can't serve both type of client with the same dish, because it's a matter of not just affordability, because that makes the accountant seem like a bad person, but it's a matter of relevance.
Mhm.
If you're making, say, $25,000 per year, you're not going to need the same services
Right.
that a company that consequently sends me a lot more than. So what I mean to say here, Marjorie, and I'm sorry if I'm also thinking out loud, these were not questions that were pre-planned where I could give you a smooth,
It's okay.
concise answer. But one thing that I have people that come to me and they tell me, I wish I had found you earlier because you gave me advice that was relevant to my situation.
Mhm.
Whereas I went to an accountant, a fancy accountant, who gave me his boutique cookie cutter answer that just did not apply to me. I have people, for instance, that form corporations or S
Mhm.
corporations, and I'm like, at your level of profit, it's not beneficial to you. Sometimes I tell a person to form an S corp. Sometimes they're big boys and girls and they need to be C corps. And other times I tell them, look, don't even set up an LLC or a corporation. Here in California, you're going to pay an $800 annual fee, which is backbreaking to you. What you may want to do is simply fake it till you make it. Go to your local county courthouse and obtain a DBA, a business assumed name certificate.
Mhm.
So, what I take pride in doing with my clients, I adapt to different economic circumstances in order to be honest and relevant to their needs. A client that comes to me and that has a $25,000 annual profit, I'm looking to keep things simple for them, not to run their bill to 2,000-3,000 per year, and vice versa. A client that makes $1 million, please understand that I'm not going to give you the same basic, advice, because you've outgrown that shoe. You no
Right.
longer fit in that shoe.
Mhm.
Hope that answers your question in a not the smoothest or most concise way. I'm
It was
sorry.
very good. We're not doing smooth and concise. We're getting information out to people that's relevant that they can understand. And I think that that's very understandable. There are different people doing different things. So high net worth individuals, you mentioned that you work with some of those, because another topic is generational wealth. Do you do anything with estates and trusts or?
I will say that I do because, Marjorie, when I first started, sometimes people inherit a client base, sometimes they buy a client base, sometimes their father, for example, was an insurance agent or a related financial professional, maybe an attorney, and they kind of like shifted, hey, go to my son or daughter for X or Y service. Because I started with 0 clients and built all of my client base, and because I've always been ambitious and hardworking, and I did very well in school. I was a geek, right?
Mhm.
I was a 4.0 student for most semesters in college. I'm the kind of accountant that an older accountant who doesn't want to handle the more complicated stuff comes to me. So I've got accountants that come to me for the more complex stuff. If you've got sales tax in multiple states and you can't handle it, you're not looking to go to the Kansas Department of Revenue to set up a sales tax license. Don't you worry, I'll figure it out. I've got clients that come to me with, I have actually accountants who are my clients that come to me to prepare like their corporation returns, to prepare trust returns for them. I have done Form 1041
Mhm.
estate tax returns. I haven't done the big, I believe, Form
706.
706. That's for the big boys and girls. That's for people that have over $25 million in income. That's beyond my economic reach. Um, I haven't done such returns, but I have consulted people. I remember one time I had this one freelance artist in Brooklyn, New York. She was making maybe say 30,000 per year, but she's like, my father back in Hong Kong, he left me a building. I'm like, well, how much is it worth? $50 million.
Wow.
you know and what do you do when you actually hear that? And I would think the first thing I told her, will call her Jane for anonymity. Jane, I think that if your father is leaving you behind a building worth $50 million, he surely has consultants, advisors, and the Korean version of CPAs looking out.
Yeah.
Because when we're talking about intergenerational wealth,
Right.
and you're the older person, first of all, you've had accountant or accountants your whole life. You're not leaving that behind, with the wind, to see how things land. You've got someone doing some planning for you. It comes
Mhm.
with being rich, right? When you're rich, you've got an army of advisors.
Yes.
So that was my first advice. But I want you to know that incidentally, yes, I've actually researched, I've done continuing education as a CPA on estate taxation because for example, many accountants, many CPAs are not familiar with the different schedules of the estate form 706. Well,
Mhm.
I know there are schedules A such and such and such. So at least
Mhm.
theoretically, I have broken the ice and can guide people in the right direction. But I must say that I have otherwise not dealt with the actual $25 million plus class. That's beyond my reach, and it's beyond, at this point in time of my life, beyond my interest. I'm going to stick with who I work with and
Mhm.
work hard to continue to build my base, rather than hoping to get a 1 in a million mini Rockefeller knock on my door. If they come my way, that'd be wonderful, and I'll get ready for them. I faked it till I've made it a bunch of times. I remember my first not-for-profit client. They ended up being a big, dropping every month $5 million in their bank account. But when I first started working with them, they asked me if I had not-for-profit experience. I said yes. That was a flat-out lie. But I took about a month to study, the IRS publication and to learn things inside out. That was
Mhm.
my own hustle or investment of time to
Like
get the
it.
knowledge to serve them.
I like it. I like it.
But to answer your question, more complex things, like let's say if we're dealing with interstate matters, sales tax, payroll in multiple states, if we're dealing with trust and estates at the form 1041, not 706 level, I do.
Mhm.
I have a person, actually, it's funny we talk about this, a person, she inherited, or she was gifted about $700,000 from her family in Saudi Arabia, and
Mhm.
she wants to know what to do with it. And I know from my own continuing education and pursuits that if you receive a foreign gift of 300,000 or more, there's a form to file. I don't know the form off the top of my head, but I've seen it before. And the point is this: I'm doing now homework for her in order to prepare that form. So I'm the dog that will hold on to his piece of meat before letting it go to the next person.
Mhm.
I do my homework on it. But if I may continue to go on and on this topic with one final thought, it is this: if, and this is important for people to know, that it's not, oh well, this accountant is saying that he's, hustling his way through. Yes, but I also did very well in school. I aced the CPA exam. I was a 4.0 student, and the one thing you learn once you have a mastery of the fundamentals of taxation, you start to see the consistency in the Internal Revenue Code in different pockets of the Internal Revenue Code. And because things build on one another, who says that you need to necessarily go to school to get that master's degree in taxation when you can take 2 months out of your time and zoom in exactly on that topic, minus the other mandatory fluffs that they have in a school? You can educate yourself. So as an accountant, that's part of continuing education. You've got the right to learn about things that you never touched on in school. You
Right.
know, uh, estate taxation was not brought up at, in my undergrad. This is many years ago, right?
Mhm.
15 plus years ago. But I took it upon myself, to take continuing education from certified people in that field and to learn from them. And then it's a matter of experience. You can also maybe hire another expert accountant or attorney in that field to review your form and
Right.
basically give them a share of profit. So there are ethical ways for your accountant to tackle topics that
Mhm.
are otherwise new to them.
I
Just as an FYI for our, hopefully not worried audience here.
I agree. I agree.
Yeah,
And part of it is knowing where to find the information, right? It's like there's
absolutely.
so many things that you can do in accounting, so many things that affect the accounting world, that you can't be expected to know everything. I know someone, he was a partner in a CPA firm and he was an auditor, but he didn't know how to do a tax return
Yeah, right.
because that wasn't what he did. That wasn't what he focused on, but he could do an audit, backwards and forwards and with his eyes closed. So it's
Hmm.
just being able to know where to find the information. But I appreciate that. I actually started in public accounting at a small firm, and they happened to be next door to an attorney's office that focused on estates and trusts.
Hmm.
So I got some experience, a lot of experience working with those type of returns. So I prepared the 706s and the 1041s and done a lot of that. And that's where I get that interest. I want to see the wealth being passed on. I've seen how it's done, where you're setting up the separate trust. So I want to see people implement those things in their lives in order to pass on that generational wealth. So,
Sure. Well, I mean, I will say this because there is generational wealth, not just for people that need to actually file the 706, but for people that, that have maybe a few $1 million simply because, I
mhm,
mean, hey, here in California, the real estate prices are ridiculous. I have clients who are like, well, I'm worth $4 or $5 million. Why? Because my house is worth over $1 million. And it was not so 30 years ago when I bought it, people tell me. And in
right.
time, with increase in equity, I've taken out a loan and bought a second one or a third one. So there's plenty of people, especially in the wealthier states like California, New York, Connecticut, uh, Colorado, or parts of Colorado that, have day-to-day ordinary wealth of a few $1 million, and they're not the super rich that have to
Mhm,
fill out the form 706, and they need to know how to pass on their
right.
assets safely. I will tell you this because I'm thinking of a person recently that came to me and they had about a net worth of $5 million, and I told them, excuse me, but at this point in time, I think you should consult with an estate and trust attorney, and it's
Mhm,
well worth the consultation. So if you do those kind of things, Marjorie, that's good for me to know. But I myself would not feel, given my inexperience at a proficient level in that, I would not feel comfortable telling a person if they have $5 million in net worth how to pass that on to their children. I would relay that to an estates and trust attorney,
mhm.
um,
And I
because
would I would do the same thing. I'm familiar with the allocation of it, looking at it from a tax planning part of it, but not with the estate planning, telling them exactly how to do all the documents and how to set up everything. So it actually estate planning kind of goes hand in hand with the estate planning attorney and the CPA, you know, because you want to discuss both sides of it. So, yeah.
Okay.
But that's not,
that's good to know.
I think so. But anything that you want to share, anything that you're passionate about, that you would like to share with the audience?
Sure. Well, ultimately what I'm, striving to grow, what I'm striving to grow in terms of a business practice is, advertising in different parts of the country, right? I see very similar stories, and I have very similar client base, clients who are thousands of miles away. I see like a commonality there, and I'm ultimately looking to build an online-based accounting practice where we are providing the same, quality service as your, CPA and to whose office you walk into. And at the same time, I'm looking to scale, to grow, and to hopefully, build a practice that expands to multiple US cities. My dream is to build like a mini super qualified H&R Block. I have a lot of people that come to me from H&R Block. H&R Block targets the 98%. I do too, but I'm a CPA, and any folks that I would have work with me and sign off on returns would have to be CPAs as well. And that's ultimately what I'm looking to grow. Like a CPA grade, your accountant that you walk into, you sit at their desk type of personalized tailor service, but on a big scale. Like we said earlier in the conversation, when you're working with middle class 98 percenters, which most of us are, I admit I am, when you're working with, with general people, there's a balance between effectiveness and efficiency.
Right.
There are things that they do and don't need. And over the years, I've kind of like razor sharp zoomed in on what it is that they do or don't need, so I can provide a CPA quality, boutique quality service that is efficient and affordable for them. And that's the model that I'm trying to replicate and ultimately scale. So that's really where I'm passionate about this point in time. I'm looking to be an online-based CPA level superior grade service, a mini H&R Block. That's where my vision is, and that's why I'm looking to work on over the next 5, 10, 20, 25 years of my career.
Okay, that's awesome. And you're located in New York and California, correct?
I have offices and I have clients in New York and California.
Okay. And then did you say that you had another office coming soon as well? Did I mention that, or are you just kind of all going virtual?
Well, I'm going to be pursuing a few locations. I'm looking at Austin, Texas. I'm looking at Philadelphia, Chicago, Portland, Oregon. So these are some of the cities that I'm just, flirting with to see where it's right for me to, target this demographic I'm working with and to set up shop there too.
Okay, awesome. Awesome. Well, I think that's exciting. CPAs, we're kind of typically scary, but I believe having an affordable service with the same quality is what's needed, because a lot of times when you go to some of the other, I've seen some tax returns, I'm sure you have, and you're like, what? So, but to be able to provide that service at a more affordable level, I believe is a good thing.
Well, you've got the ubiquitous, ever-present H&R Block, but H&R Block is a huge corporation that is getting backed up by its reputation and by its power. But many of people at H&R Block, I remember, I think a few years ago, Jackson Hewitt or a competitor made a commercial joking how they basically hire plumbers who took a 1-week course to become tax preparers during tax season. And that's absolutely no offense to plumbers. But by that flip side, you would not want an accountant to take a 1-week course in plumbing to come change your main sewer pipe. Okay.
Right.
And with that same comparison, there's a reason why you and I, worked hard to pass an exam that they say is more difficult than the bar exam. There's a reason why 80% of CPA candidates do not gain the license on their first try. There's a reason why, depending on the state, but in most states, you need to have a master's degree in accounting in order to sit for the exam. So if you need that level of education, uh, and also, some sponsorship or experience in the field, why would you think that going to a big major corporation that gives people a 2-week training course, that they should be signing off on your return? I guess what people are leaning on there is simply, when you're so big, it's easy to find you. It's like whereas if you work with a small accountant, you don't know if they're going to run away with your money. It's more difficult to build trust when you're a small nobody than when you're a corporation that anyone in the USA pretty much knows about. So people automatically put their trust in an H&R Block, but they're ultimately feeding people McDonald's in terms of quality hamburgers, or maybe more like Shake Shack, which, no offense to Shake Shack eaters, but it's more of like a trendy McDonald's. It's the same type of fast food, but I mean, that's not a good quality piece of meat, and it's not healthy, and so on and so on. So look, what I'm saying here is this, that, yes, like you say, there's a need for, for CPA quality service at an affordable price. And typically when you think of a CPA, when you think of your typically successful CPA, you think of the accountant that maybe has a business that grosses $500 to $2 million per year and has all the small businesses of the area, the successful restaurants and the contractors. And what I'm trying to be, for whatever reason, is the affordable CPA to your common person, right? Because they deserve a CPA too.
Right.
And that's what I'm pushing for, so that they don't go to an H&R Block where maybe they'll stumble upon the enrolled agent if their return gets audited and they bought audit-proof insurance. But otherwise, the person that's signing their return, you've seen some hack jobs, and so have I. And I've had people come to me who actually went to H&R Block. This is a true story. I had someone tell me, well, the lady told me that she didn't know what she was doing. She was not comfortable in my return. But I guess she was a nice person, and so being nice was enough for that person to actually finish the job with them. But it's like, you're getting paid a good amount of money by middle class standards, and you don't, quote, know what you're doing.
Right. So,
And that's no bash to necessarily H&R Block. I hope they don't come around to sue me. But the point is this: we know that H&R Block, the people that signs your return there, most of the times is not an enrolled agent or a CPA.
or a CPA. Right.
And if I may say one more thing on this topic, the IRS and Congress have talked about, putting mandatory education for preparers. And I know that the AICPA has said, well, it should not be for CPAs because they have their continuing education mandates anyway. You and I as CPAs, if we want to keep our license, we need to have X amount of continuing ed every year. There's no exceptions to that. But there should be like some kind of, regulations with tax preparers who otherwise just have a PTIN. They should have some level of education, because it's one of the main causes of fraud actually with the IRS. The IRS will tell you that the main cause of fraud is actually underqualified tax preparers or fly-by-night accountants who just, quote, steal for you and put down bogus expenses and then charge you a ridiculous fee. And 3 years later, I mean, I remember I had this one client back in the Bronx, New York, tell me, well, I went back to his office and I heard that he went back to the Dominican Republic after 3 years, after charging me 5 times more than what another person charges for a return. They just made up social security numbers on the return and then made their little fortune, which helps them, live rich, wherever it is that they return to. And so there needs to be some kind of policing. Policing is not the right word, especially in today's charged time, but there has to be some kind of regulation or supervising, that's a better word, of these tax preparers who are otherwise not qualified and just have a PTIN. Anybody can get a PTIN, really.
I agree with that. I agree. And then I also want to say that, I recommend for people that they understand what is on their tax return, so that when you're signing it, because you're signing it, I actually was going to type up the whole little thing, but said you're signing that you agree to what's on that return. Right. So if you look and if you see that you have mortgage interest of $20,000 and you didn't have you didn't pay a mortgage, it's like, that's something for you should know that.
Absolutely.
Right? It's the taxpayer's responsibility as well as the preparers. And yes, there are a lot of bogus preparers out there. So
But it's important for our audience to know that when when an accountant makes things up on your return, some people think, and I've also seen this, where people, even more educated people with more money, they think that hiring a CPA is a license to steal and to make things up on their returns. I have, I've had people come my way say, I made 200,000. Can you show 100,000 on my return? And they want to, an accountant to make up expenses. I want those people to know that unless the accountant develops a history with the IRS or the state tax authority for committing such fraudulent acts, it's not the accountant that's going to be left holding the bag. It's the taxpayer. So when you think that you're hiring an accountant and it's cool that that accountant puts down an extra 20,000 of mortgage interest, and you think, well, it's the accountant that's going to foot the bill. Absolutely not. I've had people come my way. I had a person come my way. They had an extra $25,000 of expenses, zero income, a $25,000 Schedule C loss. I'm like, do you know what kind of situation you're putting yourself in? You've got a bullseye on your back. Well, the accountant did that for me. Yeah, the accountant did that for you, but you're going to be left holding the bag.
Right.
Unless the IRS again has determined this is a suspicious accountant and they need to be removed. But it's way more difficult to prove unless people pop up left and right. They're not coming after the tax preparer's license. They're going to charge you the fraudulent fee and maybe go after the accountant. So that's for people to know. When you hire an accountant, whether for whatever reason, whether you expect them to put down more expenses, the accountant has to play by the rules. And if I may say this on this final note on this topic, I have people who think that the accountant can make the rules. That's not so. If your accountant says you can put down an extra $10,000, maybe you should even ask him or her why. And that echoes what you're saying. You should look at what you're signing. It's your responsibility. In fact, your tax preparer does not have a responsibility more than preparation, like preparation in terms of an attestation service. There's preparation, compilation, review, and audit or examination. The only thing that a tax preparer needs to look at your figures is to say that they make sense, that they make sense to them, which is already a loose or vague description.
Right.
Your accountant, your tax preparer doesn't have the responsibility to actually, ask you for invoices and bills for you to prove or substantiate your deductions.
Right. They don't have the responsibility, but a good tax preparer will ask that question because they want to
absolutely
be.
Absolutely. But since we were talking about, people, sometimes you hire a tax preparer, you put all the weight on them. You should look over your return, like you say, and like I think you were saying that you want to maybe put this in your communications to clients. You should look over your return. That's the taxpayer's responsibility. I told a client one time, would you hire an attorney to draft a will and never proofread it? Never read it? Well, you should look at your tax return. And I know there are people out there who don't even open the PDF of the return I eventually send them. And and that's something they need to do. Yes, you have a service provider, but you need to see what they're doing. When your doctor says you've got a clean bill of health, look at your annual physical, and so on.
Right. I totally agree. I totally agree. That's awesome. I think that's a good way to end. Make sure that you're looking at your tax return, hire a good CPA, good tax preparer. We're both CPAs. If you have questions, you can find Basil at Agroaccounting CPA on Instagram. Is that correct?
That's right, or just at agroaccounting.com.
At agroaccounting.com. Your virtual CPA at an affordable price.
Yes.
I love it. I love it. Thank you so much for watching. I'm Marjorie McPike, your host of the CPA Lady Podcast.